Hello my beautiful people, welcome to my YouTube channel. In today's video, I'm going to be talking about the 3 golden accounting rules. If you are coming across my videos for the first time, please do well to subscribe, comment, like and share. And if you have any question, leave it in the comment section. Please share, you never know who can be watching. Okay, let's dive in today's topic, the 3 golden accounting rules. These are the fundamentals of the double entry system. The double entry system states that in each given transaction, there must be a debit which corresponds to a credit. This is a debit of an account and a credit of an account. An account refers to the detailed records of a financial transaction. And to talk about to master the 3 golden rules, we need to know how accounts are classified and the various types of accounts. We have accounts are classified into personal and impersonal account. The personal account being the debtors account, creditors account, capital account, etc. And then the impersonal account further classified into real account and nominal account. The nominal accounts are the accounts of expenses and revenue. Then we have the real account. The real accounts are the assets account and the liabilities account. So we have the assets account, the liabilities account, the expenses account, the equity account, and the revenues account. Those are the 5 types of account. So these golden rules, they are applicable following the classification of the account. The first golden rule states that you debit what comes in and credit what goes out. That is applicable to the real account. That is the account of assets and liability. If there is any assets and liabilities account in a transaction, know that asset account will be recorded following the golden principle number 1, which states that you debit what comes in and credit what goes out. Then the golden rule number 2, it states that you debit the receiver and credit the giver. It is applicable to the personal account, which means if there is any personal account found in a transaction, for instance, you have the creditor, you have the debtor, you have drawings, you have capital, you have profit. This account will be debited if it is receiving and will be credited if it is giving. You debit the receiver and credit the giver. And then the last golden rule states that all the expenses and losses are debited, while all revenue and gains are credited. This is applicable to the nominal account, which means in any given transaction, if the transaction is to be analyzed and an expense account is identified, that expense account is supposed to be debited, while if a revenue account is to be identified, that revenue account is supposed to be credited. These rules are very important in the reporting and preparation of financial statement. This is how these golden rules are applied. Let's take a transaction like paid employees a salary by cash. In each given transaction, there must be a debit and a corresponding credit entry. Okay, you see now that we have to identify two accounts. One of these accounts has to be debited and the other credited. So you see that salary and cash. Salary is a nominal account. So if we are to start by using the golden rule on the salary account, salary is a nominal account, which is an expense because the business spend on it. So since it's an expense, you will discover that all expenses are debited and automatically cash will be credited. Okay, cash is an asset account. That is, it falls under real account. Real accounts are debited when they are coming in and are credited when they are going out of the business. That is coming into the business and going out of the business. So at this point, you will discover that cash is going out of the business to the employees. So it's supposed to be credited and automatically salaries will be credited. These golden rules ensure that financial statements are in accordance with the accounting standards. That is in accordance to the principles, concepts, and conventions of accounting.